Yeah, again, just to echo what Jane said, thank you for everyone for joining and giving up what is probably your lunch right now. It's not quite a popcorn and movie, probably more like a Tesco meal deal and a PowerPoint, but it's a close second. So today, as you probably know now, we'll be running through allowance for doubtful receivables, and any questions Jane will relay back to me, and I'll try and answer them best that I can. So let's jump in. So firstly, let's have a think about what an allowance for doubtful receivable is. And I think, first of all, before we dive directly into that, let's just cover or remind ourselves what a irrecoverable debt is. So an irrecoverable debt really is a specific debt related to one or more invoices owed from a specific customer that the business has determined will not be received. So it could happen if a customer, say, went into liquidation, for example, and because, as the business, it's very unlikely that you'll receive the money, you would probably, or therefore, write off the transaction in the accounts as irrecoverable debt. So that is really a final option. So you would have exhausted all attempts to get that money. So it's important that we recognise what an irrecoverable debt is first, before examining what an allowance for doubtful receivable is. So we have two types, really. We have a specific allowance for doubtful receivable and a general allowance for doubtful receivable. Now, they're both recorded as allowance for doubtful receivables, and we'll come on to how to calculate them separately later on. But for now, an allowance for doubtful receivable really is set up by a business when they feel it's unlikely that they will receive all the money from its customers. So just to put that into perspective, or give you an example, let's say a business owed, for instance, £500,000. It was owed £500,000 over 300 different transactions. We know that it's unlikely that they will receive all of that money. So it would be prudent at that point to set up an allowance against that amount, because that would show a more true reflection in your accounts, because we know that at that point it is unlikely that you're to receive all that money. So as I said, following the prudence concept, you would set up, or the business would set up, an allowance for doubtful receivable. So how do we create that within our accounts? Well, to create an allowance for doubtful receivable, we would debit the allowance for doubtful receivables adjustment account, and that would go as an expense within the statement of profit or loss. And we'll show that shortly as well. You would then credit the allowance for doubtful receivables account, and that would net off against the receivables ledger control account within the statement of financial position. So it's quite often people think that the allowance for doubtful receivables is a liability. It's not a liability. It is there to show that you are unlikely to receive all the money that is owed to you from customers. So it's there to net off against that receivables ledger control account balance, to give you a more true or fair picture in your accounts of how much you are more than likely going to receive. So how would that look in our T accounts? We've got two T accounts. We have the allowance for doubtful debt receivables adjustment account, and we have the allowance for doubtful receivables account. And as I just said, what we would do to create the allowance, we would debit the allowance for doubtful receivables adjustment account, and we would credit the allowance for doubtful receivables account. Now, we know that our balance on the receivables ledger control account is a debit balance. It is an asset. It is money that is owed to the business from its customers. So that allowance for doubtful receivables account will always have an overall credit balance on there to net off against that receivables ledger control account balance, obviously the credit balance going against the debit balance will lower it down. At the end of the year, what happens? So the allowance for doubtful receivables adjustment account will be transferred to the statement of profit or loss. And to do that, we would credit the balance on the allowance for doubtful receivables adjustment and debit the statement of profit or loss. And that would show as an expense. In the allowance for doubtful receivables account, we would balance off the account, and this would be shown within the statement of financial position. And again, it would be taken away from your receivables ledger control account balance to give you the net receivables. So let's put that into an example so that you can see how it would work. So ABC Limited has made the decision that based upon its receivables, it would be prudent to create an allowance for doubtful receivables. The current receivables ledger control balance is £98,700, and they've decided upon an allowance of 2% at the year ending the 30th of September 2018. So the first step there would be to calculate 2% of the receivables ledger control account. So 2% of our receivables ledger control account would work out to be 1,974. So that, what we're saying now, is what we want the allowance for doubtful receivables account, the balance to be. So all we now need to do is record that in our accounts. So we've got the two accounts, as previously mentioned. So we've got the allowance for doubtful receivables adjustment account, and we've got the allowance for doubtful receivables account. So now that we've got an amount that we want to create an allowance for, we would debit the adjustment account at year end for £1,974. We would then credit the allowance for doubtful receivables account for £1,974. So with that, you have created, or you have entered your allowance into your accounts. So then what would happen at the year end? Well, we would clear the allowance for doubtful receivables adjustment account to the P&L. So to do that, as previously mentioned, what we would do is we would credit the account for the balance, which is 1,974, and that would go to the profit or loss as an expense. Then on the allowance for doubtful receivables account, we would carry that balance down, and then the balance brought down at the start of the next period would be your 1,974. Now, in terms of how that would look in the statement of financial position, that 1,974 would be taken off your receivables ledger control account balance of 98,700 to give you your net receivables. And that is the amount that would be shown within the statement of financial position. So what I'm going to do is I'm just going to show you where that, or how that would look in the profit or loss. So this would be your standard format for your profit or loss. This may be something you've covered already. If not, it will definitely be something that you're coming onto. So we can see, as I said before, that the allowance for doubtful receivables adjustment amount, the expense would show under expenses within the profit or loss. Okay, brilliant. I think now would be a good time if we've got any questions, Jaden. If anyone's got anything at all that not sure on there, please do ask, and I will try and answer you best that I can.
Yeah, so as Will indicated, if you've got any questions, do let us know. We'll wait probably about a minute or so. If not, then we can continue with the session.
Yeah, absolutely no problem at all.
Not seeing anything. I would say, I mean, it's fine. I would say to continue. Again, I'll collate, and if any come through, I can let you know.
Yeah, that's absolutely fine. We'll have another point at which we'll stop. So any questions that you think of from this section or the next section, obviously, please do ask. That's
Oh,
absolutely
wait,
fine.
hold on. Sorry, there's one question that's just come through from Sue. She's saying, if halfway through the year we need to make a provision for a specific invoice, how do we adjust for that?
Yeah, absolutely. And a great question. And that is literally what we're going to be sort of moving on to now. So the way that we test it within AAT is that well, it's all done at year end. Okay, so you're not wrong. It could absolutely be done through the year. And the same process which I'm about to explain would allow you to adjust that allowance. Now, from AAT's perspective, we do it at a year end rather than part way through the year. However, the entries would be exactly the same as what I'm just about to run through next, because you're absolutely right. This isn't going to stay the same forever. So we've created the allowance, but obviously we're now going to come on to adjusting the allowance because it is going to move up and down. And you may get, as quite rightly asked, you may get a specific customer that you are doubtful that they would pay. So we are going to move on to those adjustments. Well, right now, really. Is there anything else, Jaden, before I move on?
No, you can move on. Again, I'll collate any additional ones, and then we can take it from there.
Yeah, no problem at all. Right then, so it was like a spoiler alert, that one. So moving on to adjusting the allowance. So once we've created this allowance, it will change. Okay, now it could change partway through the year, which is a great question, Sue. But from AAT's perspective, I said we will do these at the year end. So all adjustments will be made at year end, and that is how it will be examined as well. So what happens is year on year, because as I've sort of said in previously, that it is based on a percentage of your receivables ledger control account, we know that receivables ledger control account is going to move. That balance isn't going to stay the same. It would be a miracle to go from one year to the next with that being same. Now, because the allowance is based upon a percentage of the receivables ledger control account, that also means that we need to adjust the allowance. And that is the key word here, adjust. So we're not recreating it every time. We are just adjusting our existing balance that we've created. Okay. So with that in mind, to increase the allowance, we would debit the allowance for doubtful receivables adjustment and credit the allowance for doubtful receivables. So if you've noticed, they are the same entries as when we were creating the allowance. Okay, but again, I just want to really press this. This is for the difference. So you're not recreating it each time. You're only adjusting for the movement, okay, which will become clearer when we go into an example. So they're the entries if we want to increase the allowance, but what if we want to decrease the allowance? So to decrease it, we would debit the allowance for doubtful receivables, which would lower the balance in that account down, and we would credit the allowance for doubtful receivables adjustment account. So with that in mind, let's continue our example now. So we're using the same business, but we're going to keep going forward now. So ABC Limited has continued to keep its allowance for doubtful receivables balance at 2% in year 2 and 3 of trading. Using the following information, show how this would be adjusted for following on from year 1. So we've got the 2 receivables ledger control account balances. So at year 2, we've said it's £108,900, and in year 3, £88,400. So the first step we'd want to do is calculate what our allowance for doubtful receivables balance needs to be at the end of year 2 and what it needs to be at the end of year 3. So they would be as follows. So at the end of year 2, we want the balance in the allowance for doubtful receivables to be 2,178. And at the end of the year 3, it wants to go down to 1,768. So what we'll do is we'll bring our accounts back now. So remember, this is absolutely key. We already have a balance in there that we created from year 1 of £1,974. Okay. So the first entries we want to make are for our year 2 balance to bring it up to the 2,178. So to do that, we will further credit the allowance for doubtful receivables. And you can see that that is the difference between what we want the balance now to be at, which is 2,178, and the existing balance of 1,974. So we haven't recreated the entire thing. We are just entering in the movement. So we credited the allowance for doubtful receivables, and we would debit the allowance for doubtful receivables adjustment account. Right then, so now that we've done that, we need to close off our accounts at the year end. So the 204 would go to our statement of profit or loss again. So to do that, we've credited the adjustment account for £204, and we would debit the statement of profit or loss again as an expense. And then in the allowance for doubtful receivables, we would add up our credit column and enter the balance carried down, which is £2,178. And that, you can see, is the balance that we wanted on the account. Okay, so with that in mind, again, just to show you this within the profit or loss, our £204 would be entered in as an expense. Right then, moving into year 3. So you'll remember that in year 3, the balance actually goes down. So let's bring up our accounts again. So the starting balance in year 3 is £2,178. But this time we want to lower the balance. So the entries are going to be slightly different, because what we want to do is debit the allowance for doubtful receivables account, again, only for the movement. Okay, so we're not recreating the entire balance. We are just entering in the movement, and that will lower the account balance on the allowance for doubtful receivables. So we would debit the allowance for doubtful receivables, and we would credit the allowance for doubtful receivables adjustment. Now, a little bit different here, because what you'll notice now is that we have a credit within our allowance for doubtful receivables adjustment account, which changes things, because before we've entered this in as an expense within the statement of profit or loss. However, this is now on the credit side of the adjustment account. So this time, to clear the account balance at year end, we're going to debit the allowance for doubtful receivables adjustment for 410 and credit our statement of profit or loss for 410. But rather than going as an expense, it's now going to show as other income within the statement of profit or loss. Okay, so just to say that again, we would debit the allowance for doubtful receivables adjustment for 410, and we would credit the statement of profit or loss, and that would show under other income. I'm going to show you that anyway as part of the profit or loss in a second, so that you can see that as a visual as well. So within the allowance for doubtful receivables, the same process would occur. So we would now balance off the account at year end. So we would do the difference between our debit column and our credit column, which comes to 1,768, which is exactly what we wanted it to be at the end of year 3. Excellent. Right. Okay, then. So moving on to how that would look within the profit or loss. So we can see that this looks slightly different this time because we've got this under other income. So we would still follow the same format. And as I said, if you've not done this yet, it will be something that you're coming on to within this unit. So we start out with sales, take off the cost of sales to give you the gross profit. However, this time what we would do is we would add in the allowance for doubtful receivables adjustment of £410. And that would give us an adjusted gross profit. So we would add that on to our gross profit. Okay. Right then, Jaden, again, I think this would be a great time if we've got any questions. I think it's a good point.
Yeah, we do have a couple of questions here.
Okay.
Yeah. So the first question here is from Christine, and she's asking, how does the allowance change if we had to write off a debt that was over the amount set aside for bad debt?
Ooh, okay. Just could probably do a little bit more clarification on that one, because if you're writing off bad debt, that is separate from creating the allowance. So you see, what would happen is any irrecoverable debts would be written off before you calculated the allowance. So that would be absolutely key when you're going through the order of creating these. So if you've got irrecoverable debt, the entries for that, hopefully done that at this point, but if you were entering that in, we would debit the irrecoverable debts account, we would debit the VAT account, and we would credit the receivables ledger control account. Now what that would do is that would reduce the amount on our receivables ledger control account, and then after we'd done that, we would then calculate our allowance for doubtful receivables balance. Now, if that doesn't answer that, please do sort of follow up on that and let me know, and I'll try and add what I can to it if you're not sure still.
Okay, perfect. And sorry, the second question, I think this one might also need a little bit more clarification, but Daria has asked, how do you know the value of the adjustment?
How do you know the value of the adjustment? So, right, I tell you what, let's just go back. Let's go back a couple of slides and we can sort that one, no problem at all. Right. So in fact, let's go back a little bit further. I've gone so far back, it's confused. Right, okay. So our original balance was 1,974. So that was in year 1. Okay, so that was the balance on the account. Now, let's move on to year 2 now. Scroll back through. So in year 2, the business wanted the allowance, or the balance on the allowance, to be 2,178. So what you would do to calculate the movement, it would be the difference between what you want the balance to be at the end of the year and the existing balance. So for example, at the end of year 2, we're saying we want it to be £2,178. The existing balance was 1,974. So what you would do is you do the 2,178 minus the 1,974 that is already in there, and that would give you £204. And that is your difference that you would then enter in year 2. Okay, now in year 3, we would follow the same process. So we know that at the end of year 2, the balance is now £2,178. But at the end of year 3, we want it to be 1,768. So what we would do is, again, we would find the difference between the existing balance and what we want the balance to be at the end of year 3. So we do 2,178, which is your figure in red, minus your 1,768, which gives you £410. So what we do is the movement between what it's currently at and what we want it to be would be £410. So that is the amount that we would enter in to adjust the balance. Does that help to answer those questions? Have we got anything further on those or any additional questions on the back of that?
No additional questions so far. But yes, of course, if any do come through, I guess we can look at them maybe towards the end. But yes, Daria said, okay, thank you. So I'm assuming that answered her question.
Brilliant. Okay, like I say, if that doesn't, if for any of those questions that have come in, if it genuinely doesn't answer your question, I am in no way offended. Please let me know, and I'll try and add to what I've already said. That's absolutely fine. Right, we'll just skip back along. There will be one more point at the end that you can ask questions as well. So for now, we'll just skip back along to where we were. Right, yes, here we are. Okay, so this is just about calculating the specific allowance and the general allowance. So although they're both entered into the allowance for doubtful receivables account, you can have a specific allowance and you can have a general allowance. Now, a specific allowance is against one particular customer. Okay, so it may be that you think that someone's having some financial difficulty and you want to make, you're not so sure as to write it off yet, but you are, as I said, the business is unsure as to whether they will pay. So again, prudence concept comes in, make a specific allowance against that particular customer or that invoice. So we just need to make sure when we're doing that we get it in the correct order. So let's have a look at an example, because I think that will help to clarify this. So XYZ Limited receivable, created with the names here, we've got ABC and XYZ. XYZ Limited receivables ledger control account balance as at the 31st of December, so period end, is £140,600. They have decided to make 2 adjustments. Juice Limited is a customer who owes £1,500. XYZ Limited has heard that the business is currently encountering some financial difficulties and so has decided to make this a specific doubtful receivable. And then part B, it says XYZ Limited has also decided that it is likely that some other customers currently owing money will become unable to pay their debts. The business has decided, therefore, to create a general allowance for doubtful receivables of 2% of the balance on the receivables ledger control account. So what's really important here is the order in which we do these. So let's have a look. So we know we have a receivables ledger control account balance of £140,600. First, we have a specific doubtful receivable that would be created for £1,500. Okay, now the problem that we've got is that £1,500 is included within the £140,600 receivables ledger control account balance. So when it comes to creating the general allowance, we need to remove that 1,500 to calculate our 2%, because otherwise you're going to be calculating your general allowance of 2% on that receivables ledger control account balance that includes that 1,500. So we're effectively going to double count slightly. So we would create a general allowance of 2% against the remaining balance. So the way that that would look is we do the receivables ledger control account balance of 140,600 less the specific allowance of 1,500 to give you 139,100. And then we would calculate our general allowance at 2% based on that remaining balance. So that would give us 2,782, which gives us a specific allowance of £1,500 and a general allowance of £2,782. So what we would do is we would create an allowance for doubtful receivables of the two added together of £4,282. Now, I really want to sort of specify the double entry is exactly the same. That does not change. Okay, it is still, if you were creating it, debiting your allowance for doubtful receivables adjustment, crediting your allowance for doubtful receivables. It is purely the calculation of how to get to the allowance for doubtful receivable that is slightly different, but the double entry remains exactly the same. Okay, fantastic. So what we've covered there is how to create the allowance for doubtful receivable. We've then moved on to how to adjust the allowance for doubtful receivables balance year on year. So we've seen how it can increase and we've seen how it can decrease. And we've gone through the double entry for both of those. And we've now looked at how to create a specific and general allowance. So that does cover everything on today's session for allowance for doubtful receivables. I do hope that you found it useful. Obviously, quite a lot of information there, so you will be able to watch this back as well if there's something that you're not sure on. But have we got any questions for right now, Jaden?
Yes, we do have a few questions here. So we've got one question from Susa, who's asked, what will the balanced credit debit be for the end of year 3?
So what will the... Can you just read that one again,
yeah, so
please?
Said, what will the balance and then C/D, which I presume means credit?
Yeah, balance carried down. Yeah.
What would that be for the end of year 3?
Yeah, let me just go back because we do have that one. So this was for the end of year 3. Okay, so the balance carried down at the end of year 3 would be 1,768. So the balance carried down will always be the balance that you want on the account at the year end. And that would be brought down on the credit side at the end of the following period. Okay, so at the start of the following period. Okay, so the balance would be at the end of year 3, 1,768. Okay, and just to clarify as well, to see if we go back to year 3, the one in green there, the 1,768, that is the balance that we wanted. Okay, so hopefully that helps to answer that one.
Yes, she did say thank you, so I'm hoping that we was able to cover that one. Vinny has asked, so we remove any irrecoverable debts first, and then the specific doubtful debt allowances, and then finally the general doubtful receivable allowance. Is that right?
Yep. So the way that, basically spot on. Yeah. So what we would do is we would write off any irrecoverable debts first. So that would have been done and they would have been taken out of your allowance of your receivables ledger control account. We would then calculate a specific allowance if there was one. And then for the purposes of calculating the general allowance, that would be taken off to do the calculation. So I'll just bring that back up here. So we can see that we've taken out the specific allowance for the purposes of calculating the general allowance, because we don't want to work out 2% on the full 140,600, because otherwise we'd actually be double counting, because that includes that 1,500. So we definitely don't want to be doing that.
Okay, perfect.
Hopefully that helps answer that. Yeah.
Yeah. Hopefully that does cover that. Of course, if not, let us know. And then, yeah, no, Vinny said that's lovely. So yeah, I think that covered it. Thank you very much.
Brilliant.
And Diana mentioned, so next year, will we receive the 1,500? Not sure what.
Yeah, I mean, it's possible. This is the thing, it is possible. So the point of the allowance, you see, is to say that we might not receive it. Okay, so there is some doubt within the business's mind that they will not receive that money. Now, again, I know I keep saying prudence concept, but the prudence concept is there to be cautious. So we don't want to overstate the figures within our accounts. Now, although that would look more attractive to such as an investor, we don't want to do that because we might not receive it. So it's not fair for us to show that in the accounts when we've got some doubt as to whether we will receive that. Now, if that gets to the point where we decide that we're definitely not going to receive it as a business, then you would write it off out of your accounts and it would become an irrecoverable debt. Okay, and just to add on that, if for whatever reason that was received, that money, then obviously that if the money was received from that particular customer, the 1,500 then would be entered into the bank and taken out of your receivables ledger control account anyway, because it would no longer be owed. So there would be, I mean, that would be great for the business, obviously. There would then no longer need to be that specific doubtful receivable created, because you'd have received the money. Does that help to answer that one?
Yeah, no, thanks for going over that. I'm hoping that has covered it. Yeah, no. Okay, no, I think Risha had a question, but she says she thinks it's been answered now. So yeah, I think that's fine. I was going to read that one out next, but I think she said that it's been answered. So that is fine. I do believe that is.
Is there?
Oh wait, hold on.
Yeah.
Mm-hmm.
All I was going to say, Jay, is there any way that people have got the opportunity to ask questions after, if anything comes to them?
Yes, absolutely. So again, these questions will remain on the live. So even if we don't get to it, we would still see the questions, and those can be answered after the live. It doesn't necessarily need to be answered right now. Those can be passed over and can be answered. It doesn't have to be right now.
Okay, that's fine. Just double checking.
Yeah. Okay, so that's perfect. So just going to start wrapping up now. So I do want to thank everyone for joining, Facebook Live. Do remember that these sessions are recorded, so you will be able to rewatch this in case that you missed something, or if you just want to watch it again. For additional content, news, and memes, if you can follow our Facebook page if you haven't already, that's www.facebook.com/AAT. And it's the same on Instagram as well as LinkedIn and Twitter as well. Of course, I do want to give a big shout out to Training Link as well. So again, thank you, Wolf, for coming on. If you're interested in high quality distance learning materials as well as tutoring and teaching, definitely give training link a look in. There will be some links in the description. And also shout out to Will himself. Will has a YouTube channel in which he covers a lot of AAT content. So I would say definitely give that a look. If you're stuck on something, have a look to see if Will has covered it. He covers things very well. So that is Will Boardman that you can find on YouTube. Yeah, Will, do you have anything that you'd like to add towards the end?
I think just again, just echoing what you said. Thank you for everyone joining out. You have found it useful. If anything comes to you after, obviously, please do ask. That that would be great. And again, yeah, thank you for giving up your time and joining the session.
All right, thank you very much. All right, so if there is nothing else, we will sign off. Again, thank you all for joining, and we will see you later.
Thanks all.
Bye.